markets around you is showing doom and gloom. And at this time, if I say XRP can move higher and you are looking at the market like this, you may look at it with bearish attitude. But in that case, you miss this one. XRP is currently close to the support of a descending broadening wedge. Historically speaking, that ends up going upside, testing the upside. So you look at this A, B, C, D, and then you come to the bottom, which is this one, right? So once you make that, next leg is to the upside. So now you are looking at this and you are like, okay, fine, I get this point. You are here, you have a possibility of going up. Is that it? Is that the bull run or the upside we are talking? No, it's not just the 80%, because once you break higher, that's when your next leg starts. So from here, in this current point of view, you're not just talking about 50-60%. You're talking about going to retest the previous highs, which we put back in last year, close to $2. And then, yeah, we need to break that. But at that same point, you need to know, yes, the market shows you a lot of different attitudes, right? Within the market, the current affairs, it looks good, it looks great, the news is actually positive, right? You can actually see that big amounts of XRP is being moved out of exchange, not to exchange. So they are not actually selling, they're actually moving it away, holding for longer. But the current issue which we have right now is the supply chain disruption, is the interest rate hikes, is, all those comes behind that. So the inflation is going up. That means the rates will also have to go up. So at that time, governments are like, okay, screw crypto. We're going to do regulation. Now, long-term regulation is really great. Short-term, that's going to be making the market volatile. At a time when the stocks, you name these, all of these are having the impact. Now, if you remember back then, first time when we reached this point, we talked about Netflix. Saying, okay, I think this is kind of the long-term trend line support. So this is all the way from 2003, right? And you're observing that you are there. So the current level of panic will be a little bit low if you understand the market. Now, yes, I know there's a lot of people suggesting that you're going to drop another 50%, but you need to actually wait and see when we break this one. This is the current support. We bounce from there. We hit this resistance. We are coming back down. So if you go to the Dow Jones, what you're observing is something similar here too. You're coming back to this level. So if you break to the downside, yes, you're going to come all the way down. But now you have the inflation rates out from US. Next will be the Fed's rate hike. Fine. So as the rate hike comes, if the price is bouncing back and it's somewhere here, it's going to again drop to test this support. But if it's close to this support and Fed is hiking the rates, then you may break this one and go lower. Now, on the other hand, already dollar is moving up, and if Fed is to increase 25, 50, 75 basis point, depending upon the size of that hike, dollar may again go up. It's already obliterating a lot of emerging market currencies. See, this one is Indian rupee and it's getting hammered. It's at all-time low versus the dollar. That means people who are in that country will need a lot more purchasing power to buy anything coming from the outside. So at this point, you're like, okay, the market entirely is giving you this narrative where you're like, okay, everything is going down. It's doomed. No, that's the time when you actually think properly. So if you take time, yes, you have a pattern where you are slowly moving up, and most likely it's going to break to the downside and then bounce. Because your MACD is suggesting the same. You go cross this one and you drop. You go cross this one and the price drops to the support. And then the price go above the moving average. So for you right now, moving averages are like this. It's too far away from each other. So that is a 3-day chart of Bitcoin where you are looking at that. Right? Fine. On a weekly, this is where you are. You are going to close this weekly chart in next 2 days. Right? This is a Saturday for me. So Sunday, Monday, it's done. Now on a 3-day chart for Bitcoin and for crypto, it's gonna close this candle here the next day. That's like 24-25 hours, and you're gonna get a candle close. Now this is just pure speculation from my end. What if this candle closes in green? That just means it only has to go back to like 30,500 and it's closing in green. What if it actually goes up and closes near 31,000? That's actually a bullish scenario being shown there, right? So when you are in the market, look at the candle which is playing out right now in that time frame which you're observing, and then look at the last candle which has closed. That gives you the idea. So on a daily chart, you kind of get this hanging man and then a little bit of correction. But now we are like, okay, fine, let me zoom a little bit out. And on a 3-day chart, you get this engulfing candle, then followed by this correction. And then again, if you zoom back on a weekly, monthly, you get this narrative like you are close to a support, and usually that's not where you go bearish. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. So now we actually know, like, okay, we have descending broadening wedge, we have ascending broadening wedge. So if you are like, okay, will that actually work out in this particular asset? Do you really think this pattern is going to play out? I'm like, okay, let's actually take it in the other way. You look at the opposite. Did it actually break to the downside or to the upside? And when it actually broke to the downside, did it actually add momentum? Did it retest that one? So I'm like, okay, the possibilities suggest that, okay, it played out. That's not only in one or two assets, right? You go back into different assets, you can actually literally see that in a lot of different assets. Say here, you are literally observing that this was trending to the upside, fine. And at that time, you were literally getting the move like this. So you had that similar pattern breaking to the downside, retesting, and then going lower. Now, you come to Ether, this is what it actually shows. Okay, you have short-term patterns, which is happening inside a macro pattern. Fine. So inside that, if you're observing this, if you break to the downside, you have another support here, which happens to be the support of medium term. If you break to the upside, the resistance comes here. So your upside is more compared to your downside in this particular scenario for Ether. Why? One, it's your trend line support here. I'll make that into a different color so it's easily visible. Now, then you have another level of support, which happens to be the horizontal support resistance zone here. Fine. So you are right now at 1, 2, 3 level of supports, which is short, medium, and long term. If you're breaking through that, okay, then the story entirely changes. You're completely going like, okay, it's panic, the market is going to go down. But right now, that's not when you actually do that. Because when you get this pattern and you get this trend line, that is completely fine. Because now you are relying more, or you should be relying more on long-term charts. Say you go on to this and you're like, okay, where is the indicator right now? It's getting oversold. And mostly whenever it's there, historically speaking, you are close to the bottom of that particular corrective wave. That is actually interesting, because now you are going to different assets inside crypto market, looking at all of them, and you're like, okay, I feel like they are slowing down the momentum to the downside. And you're close to the bottom, historical bottom in those indicators, which actually give you that idea clearly. You shouldn't be going completely bearish here. You should be having dry powder waiting for breakouts, agreed. But you should also be following the price and historical supports. Because if you are getting supported at one range, then you are looking for a breakout, because you are right now inside this pattern. Say for XLM, you're bouncing to the upside, testing this, fine. If you're trading, you're range bound trading, you're taking your profits and moving out. But if you are a long-term trader, you are literally waiting for the measured move. If you are a bull, you're looking for a 70% after the break. Fine. So now we go to Bitcoin. Like, okay, we dropped. We are right now close to $29,000. What do you expect? Now, that happens to be in a short-term chart. You go to a daily chart and you are following the price. Okay, fine. The price is actually showing you clearly that it's being bouncing from this level of support from quite time. So if you are looking at the short term, okay, we've been inside this, we are bouncing, we are consolidating. So if you break to the downside, now you know what your downside is. That is your measured move. You get like 9-10% to the downside. So if you drop from here 28k, that literally means you have downside up to 25,000. Now last time in some of the exchanges you already went just below 25,000. So that has already been there in different exchanges order books. So the buy sells your orders, most of them, if there are any more there, it will be getting filled with that. But if not, if it is breaking to the upside, you have a 13% after the break, which actually takes the price close to the moving average here, say 35,000. Now again, is that completely bullish? No, it's not. You need to actually break through this level of resistance, which is 36k. But yes, that's a bullish move considering that your pattern and your support, it's like this. Fine, you are actually looking into this pattern, you are saying, okay, right now I'm connecting these resistance, and I'm like, you have one support, 2 and 3, most likely you're going to go up and break this, because if that breaks, then it is a bullish attitude, because the market is actually making a bullish pattern, a falling wedge, and breaking that to the upside. So now you change bullish. But at this point, again, like what we talked about the ether, you are having a short term pattern, and inside this short term pattern you are looking for downside. Fine, because the impulse is to the downside. Now if you break that to the downside, what is your downside? This is your support trend line. Fine, that happens to be close to 2600. That is not actually that bad considering where we are right now. Now if you are reaching that 26,000 mark, we already talked about that. The possibility is like, okay, you are going to go to 25, 26 and you're going to bounce. Now this also happened to be another long-term support zone. So now you have a long-term scenario which is being played out from last 2 years, and then you have this one, medium term. That's another support. So if you are technical guy, then you are looking for these supports to hold, because it was being strong from a lot of time and it's still respecting the price. Fine, and you are going to look at the indicators, and the same story comes into play here too. Now I know it doesn't actually look really good when the price actually goes this low, and if you are looking like, okay, I'm a wave guy, I'm looking at the wave structures, then there's your first corrective wave, you go back up, so that's your A, this is your B, and then this is your C leg. Fine, but that is end of your correction. And if you are observing the market, you already understood like, okay, last time you dropped, you actually went up, you retested that, the retest was not too low from the first one. This time you are at the support and you're looking for the long-term indicators, whether they are close to support or they have a lot of room to the downside. And if you're observing like this on a weekly for Bitcoin, you're still inside this pattern. The pattern itself is bullish, and right now you're close to the support. So if you look at this inside this pattern from June 2020, so that's almost like 2 years. That's from, yeah, the first bounce happens, okay, that's 2 years already. So in that 2-year time frame, you bounced once, twice, and earlier this year makes a third one. So this time most likely you're going to bounce, because that's the 4th time you're coming to that support. So if you happen to bounce, the 35k resistance again comes into play. Now yes, the macro environment, the financial environment will play into this. Why? Crypto, there's a lot of retailers. So if your cost of living is increasing so much, say imagine you were putting $500 a month into crypto. Fine. Now with the inflation going up and you're from the working class and you can't afford 500. Now you're like, okay, I can go for 100. I can go for 250. Fine. But as this continue in the inflation side, now you can't. So the new amount of money coming into the market from the retail side is low. The only thing which is going to change that is if the governments are going to come out with some kind of, base where they're saying, okay, we are going to give you free money. We are going to give you free money. And I think that's actually coming. Now, if the central banks are like, no, we are going to reduce the inflation to 2%, Now from the 8% to 2%, it's gonna take a lot more aggressive moves. It won't just be 25 basis point moves. It'll be 50, it'll be 75, it'll be 100. And if that happens, housing market, stock market, you name it, all of them are gonna go down, and we are gonna get that impact here in the crypto as well. But zooming out and asking the same, now you're like, okay, fine, I'm a guy of history, I try to learn from history. This is 38% to the downside. That's the first surprise corona downside. Fine. Now you're going to see what we did till this point. You're like, okay, that's just half of it. If we are going to do that same move, we're going to drop way lower. Now that's Dow Jones for you. You go to S&P 500 to measure the same. You're like, okay, it's also showing you something similar, that the stock market can actually drop 35% on this manner. Now that 35% takes you somewhere close to this one. Now, okay, you're like, fine. I understand that stock market is much longer than crypto market. So you're going to look at the history, and inside the history, you see multiple fluctuations where you actually get the 50%, 60% drop. Now this is where, with the S&P 500, I feel like Bitcoin has something to do here. Now, what do I mean by that? I'm not saying Bitcoin is coming into the S&P 500. I'm saying, like, if you look at this particular pattern inside Bitcoin, you just give attention to the pattern and the direction. Say your impulse was to the upside, and after that upside, you are actually doing this particular pattern, right? And then what happens? Here you are right now, here you don't know whether it's going to go up or down. I agree on that particular point, but when you go onto the S&P 500, you get a similar narrative there, right? You have the impulse to the upside, the impulse is going crazy, fine. Then at one point you end up like, okay, I'm making a double top. Fine, you dropped, you made a new low. What happened next? The market actually recovered and it went up for an extended bull market. So this happened to be your corrective phase, and in stock market, the time taken is too long. So if you are just looking at that, that's like 5,000 days. That's crazy. I agree. Now in the crypto market, when you are considering the same, you are looking for the time taken to complete this double top. It's somewhere here. Fine, that's 500 days, not 5,000 days. So if you are about to look for that bull market here in the crypto market, it is coming, whether you agree or not. With time, with patience, you are going to enter into that level. Because say some of these assets which have ton of fundamentals expanding on a regular basis, the project is getting more sound. Developers are pushing more and more into that. They're putting hard time, money, effort, everything in there. And if you believe it's going to go down, that's going to be an entirely different story. Because at this time for XRP, you are getting this particular move and possibilities of it going to test the $2 mark. Now, there will be a lot of guys who are selling at $2. So if you want to take profit, start from 1.6, 1.7, 1.8 like that, because there's a lot of people who are stuck in this range, happen to be buying at that range when we started buying here in this range below 0.2, close to 0.35. Right? So you made profit 6x, 10x depending upon where you bought by the stop, and they lost it till this point. Now, if they have patience and the price is coming back up, okay, they can just take the money out, but the inflation already took out 50% of your money if it's in going back to dollar rather than going into another asset. Now, if you have patience, you take your money back, you wait for a correction, you enter in that correction. Now, if you're like, I'm a long-term guy, I don't care about this noise happening short-term, you don't have to do anything. You bought the asset, now you're holding for your targeted price. Need patience, because that's going to be the hard part. And when I say patience, I know a lot of you guys are like, no, not anymore. But that's how the markets work. If you go look at XRP in its last market cycle, I know a lot of people would be tired just looking at the last market cycles, but in reality, you didn't do much of price fluctuation for like 1,300 days, like 4 years. Then you had a blast to the upside. So those who waited through that time made a lot of money. You can go look at a lot of different assets. Say you go look at Chili's. You're entering into Chili's, you're just looking at Chili's asking, okay, it actually did a 100x move. Fine. How long did it actually consolidate before it happened to move that high? It's like 600 days of consolidation. Fine. Now the market you're looking at is like 500 days of consolidation. It's not even like that. So if you are paying your time holding that asset, now given that that asset is working fine, the project is not going down, the project is expanding, the project has great leaders, the protocol itself is sound, and they are solving a real life problem, that's going to go up. Guys, if you are holding XRP, you don't have much doubt about all these factors, right? Does the protocol work? It does. Is it getting adoption? It is. Does it actually have great leaders? We have great leaders coming from, Brad is from Yahoo. You can actually know that. That's a long history in Silicon Valley, knowing all these business cycle, market cycle. They know how to build things even when the market goes down. So the value and the price is different. You're paying for something and that's the price. You're getting something, that's the value. So if you want to make money, you need to buy something which is priced much lower than its value. For me, that's XRP now. Now, yeah, in the crypto market, you have a ton of assets and a lot of them also look undervalued with strong fundamentals. If you are there, you can look at the Patreon to get those updates for a lot of different assets. And if you receive value for your time, please do consider hitting that like and subscribe button if you haven't done that already. I'll meet you guys on the next video. Bye for now.